Alright guys, so we got to talk about what happened in the markets today and what we can expect moving forward. But before I go ahead and get into it, myself and the team over the Discord placed several buys yesterday in the market that moved up well today. So if you want to get up in the plays and the moves that we make, ensure that you're tapping into our Discord by hitting that top link in the description so that you are taking full advantage of this pullback in the markets. Not only that, I teach the community over there the fundamentals and technicals of investing every single weekend, so I look forward to seeing you over there. Now today we were hit by a surprise green day out there in the markets, which is a stark difference from what we saw at the beginning of the week when the markets were deep in the red. Now we've had a new aggravator introduced to the markets this week. That's that Evergrande, the Chinese property developer. Now that takes the total number of aggravators in this market to over 10 with ease. But what the market likes to do is fixate on the latest one. You guys remember early in the year when the Fed was announcing plans to taper, every time Powell spoke, the markets came down. Now fortunately we're past that, but we're on to the next one. Now the fear is that this heavily indebted property developer, if they don't meet their debt obligations, they can fall into liquidation, having spillover effects into other areas of the economy, affecting the lenders, causing a crunch. Okay, so it's a big deal if they were to fall into liquidation, but in typical market fashion, overreacted. That's why you saw global markets come down. Now today, there was positive news that they brokered a private deal to help them meet certain obligations, their domestic loans and bonds. Now there's still a question mark hanging over their foreign ones, but the market didn't seem to care about that. That's why we saw green across the board in the markets. Now this is a good sign because it shows that China, they got the tools, they got the policy space to ease this issue and not cause any kind of systemic crisis in the markets based off the Evergrande. All right, so this is positive signs for us as investors, but it leaves the question of how do we digest this information and where do the markets move from here? So we've got the SPY. Now this is an ETF that tracks the SP 500. Right now we're sitting bang in between the 50-day moving average and the 100-day moving average. Now the markets have bounced off that 100-day moving average, and it's looking like very early signs that the market wants to try and do a U-turn to try and reclaim that 50-day moving average territory. Now this is big because if the markets was to reclaim those levels, I believe we would finish off this year at all-time highs, causing a pull for other stocks in the market. Now there's a major catalyst that not many are speaking about, and that is the strength of corporate earnings that could get the SPY to hit these types of levels, and it's acted as rocket fuel to push the markets up the entire year. Now we've just left the Q2 earnings season. It was blowout performances across the board. We're about to enter into Q3 earnings season in a couple of weeks time. Now there's a mass hiring spree out there in the markets at the moment. 800,000 jobs added in the last month, so it shows you the strength of the companies. If they didn't have money, if they weren't growing, they wouldn't be hiring at these accelerated rates. Not only that, there's strength in many different sectors, from energy to commodities to retail to tech, that should all be providing phenomenal results come their earnings, and a lot of these companies have already stated great guidance for this quarter coming. That being said, it could act as again a bit of a spark for these markets to get them moving in the right direction over the course of the rest of the year. Alright guys, so given that intel, the question is how do we move in these markets? Now right now the market is still doing price discovery, still digesting information, deciding on where it wants to move. That being said, I'm still active in the markets because there's nothing worse than seeing a play on a price point that you like, being hesitant, and then it runs away from you. So active in the markets, focusing on key themes and high conviction plays, but just ensuring there's always capital on the sidelines in case if the market wants to move lower, you can then move in at cheaper entry. Alright guys, so I want to share with you the play that I picked up yesterday in the markets because I believe this pullback we are seeing is a great opportunity to go ahead and add to your high conviction plays. Now if you're new to the channel, it's probably 99% chance you haven't heard of this play because it's not one that's circulating doing the rounds on YouTube. Picked up ticker symbol SBLK, that is Star Bulk Carriers. Now this is a dry bulk shipping play, so they move the minerals, the grains, the commodities on sea for their clients from point A to B. Now this is a booming market right now given the recovery we've seen in commodities, and that's got supply and demand dynamics at effect. High demand for the commodities, whether that's steel, whether that's aluminium, whether that's coal, and then a lot of supply constraints as well, keeping prices elevated, playing into Starbucks favor. Now they got the blend of everything I like to see in a play. That is fast growing revenues, great net income, also phenomenal guidance moving forward, because the Baltic Dry Index, that is a gauge of the price they're able to charge their customers, is exploding right now, and it's exploded a lot more than when they last reported. So they are currently cash windfalls for the company, and they're heading into a phenomenal quarter in Q3, and that should set themselves up for a very strong close to this year. So I had to go ahead and add. In fact, let me show you guys the charts on this one. We've recently seen this one drop down about 15% off the back of the Evergrande situation. The market is reacting to fears of them potentially going into liquidation, which would have spillover effects into other industries like the commodities, like metals and mining, given how much of a consumer they are, and the general property sector in China. However, we're already seeing easing of the issues. They brokered that deal to sort one of their payments, and I'm expecting more of these types of moves to calm the situation. I don't think this is going to be a Lehman type event. I think the government in China is going to step up to the table and sort the issue out over there and ensure there's no contagion, no spillover into the global economy. So I think this will be well contained. That being said, it opens up massive opportunities for those plays that have been hit off the back of this issue, and Starbucks is one of them. I want you guys to check this out with me. Right now, they're sitting at their 100-day EMA. That's that purple line that you guys can see. Now, it's acted as a form of support on the play over the last year, especially when we've seen this one dip down. So check this out. In July, when we saw a massive dip in the play of about 25%, that just goes to show you it can be a volatile play. You've got to accept the volatility with this one, but use it to your advantage is what I'm going for here. If you picked up the play at the dip, you'd have made 40% on your money. Okay, so I'm expecting this one to make a great rebound, just given how strong the play is from a fundamental perspective and the phenomenal quarters that we have got coming up on the play. Also, if you check out the RSI, when I picked up the play, they were standing about 38. The last time they dipped down in July, the RSI was standing at 32, so not too far off that bounce zone that we last saw. So the idea was for me to ease into the play at that level, and if they were to drop further, I'll continue to buy, because I know they're trading down towards being very oversold. So pick this one up, sent the alert over to the Discord. Now today they moved up about 5% in the after hours. They're also up as well, so we're up the money on that purchase, and I'm expecting them to continue climbing over the next couple of weeks and months in the run up to their earnings. Now I've got a price target in this one of $32, just given how fundamentally strong the play is, and as I say, those two blowout quarters that they are about to have this year. Alright guys, so that wraps up for this one. If you've got any questions for me, drop them down below and I get back to you. On your way out, make sure you guys light up that comment section for me. If you're new, join the movement by hitting that subscribe, and I'll catch you guys in the next one.